Hi, welcome to this video day, which is on the 31st of October on Thursday. We're just going to be looking at what we consider to be the best trade setup of all to look out for in the markets. Now, in terms of this trade setup, I did feature it in a video at the weekend. It's based around learning the simple logic in a classic investment book called the Zurich Axioms, and then looking at George Soros's theory of anticipation of traders. Now, we have done this trade setup twice this month. We've done plenty of videos on the setup. First time we tried it was long of the GBP. Now, the GBP trades that we did, we went long, best profit of the year. And we've recently gone heavily short the Canadian dollar. That trade setup is doing okay so far, and I'm going to update it in this video. We're looking hopefully for more profit to come from it. Now, in terms of the Canadian dollar, we will look at it against the USD, also the GBP, the JPY, and the euro. In terms of the trade setup itself, you just need the right mindset to execute it, which a lot of traders don't have. They could if they wanted to. Now, also, when you are in the trade setup, you have to manage it in a certain way, which is uncomfortable. And we're just going to come to how we are managing the trade setup in relation to the CAD trades that we've got open. So what we will do now is we will go to the charts, but please do keep in mind, it is my view as of right now. It could, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, including our exact entry, stops and targets on a daily basis, you can get live access to our member center on the link beneath this video. Right, let's take a look at the first trade setup, which is going to be USD CAD. All right, on the first of the four pairs we look at, this one is USD CAD, of course. It's actually the underperformer so far, just under 100 pips. The others are between 100 and 200 pips. But CAD for us going down a long way. Now, in terms of this trade setup, it's one where we've hit pretty big. And basically, the way we're playing trade setup, we can't lose, but we're not moving our stop too close. So come to that in a moment. But in terms of this quote up here, I thought it's really good, actually. I found it today. Someone sent it to me. And it's a quote to keep in mind for anyone who's trading financial markets. So basically, quote, understanding how our brains work, our limitations, endless mental shortcuts, and deeply ingrained biases at times of market extremes by avoiding emotional overreaction and remaining aware of our biases may be possible to know market participants better than they know themselves. That comes from Seth Klarman, but it is associated, or I associate that quote with George Soros's theory of anticipation of traders. Possible to know market participants better than they know themselves. Speculators who bought the Canadian dollar, and we had a really massive move in speculative longs last week, which we discussed in previous videos, just we're not thinking about what's going on in the background in terms of the CAD. Got too long, and now they're getting hit on the stop. Now, in terms of George Soros's theory of anticipation, he says, basically, the market is a discounting mechanism. It will discount news events, but when traders actually anticipate events with no substantiation in fact, that is giving you the warning sign of good trade. And just to go through what he means, Bank of Canada yesterday, most market participants, the overwhelming majority, thought there'd be no rate cut from the Bank of Canada, so that was discounted. Okay, Bank of Canada, most market participants thought they were going to do an optimistic, hawkish statement. That was anticipated by market participants. But there was no substantiation in fact for why they would do that. In their last meeting, they were pretty cautious. Why would they be hawkish in yesterday's meeting? Of course, they weren't hawkish, and that helped the CAD go down. Traders anticipating something with no substantiation in fact. Now, we had another central bank meeting yesterday, which was the Fed. The Fed cut rates by 25 basis points. That was discounted by 93% if you look at CME FedWatch. We thought they could possibly hold, actually. They didn't. They cut as anticipated. So basically, the USD wasn't going to sell off much on that. It was already in the price. But the markets were anticipating the Fed to indicate more rate cuts going forward. Now, there's no reason for them to do that because you could see how divided they were at the previous meeting about cutting rates. So coming into yesterday's meeting, one more cut, and that's basically it for the time being. Can't cut rates too quickly, okay? So we were saying we just did not see the Fed indicating more rate cuts. They didn't. Traders had anticipated they would, and of course that helped the CAD go down. Now, also backing up our view, the Canadian dollar was overbought. We had commercial smart money on the COT net traders position, our favorite smart money tool, indicating the biggest short move in 1.5 years. So basically, smart money commercials just hit the Canadian dollar with sells all over the place. The speculators really came in bought and hard. Now, in terms of the trade setup, you ideally want a commercial smart money on your side. And in terms of the currency you're looking at, look at it to be universally overbought or oversold on other majors, all other majors. That's exactly what the Canadian dollar was coming into yesterday's central bank meetings. Most overbought major currency. Obviously, I made reference earlier to the British pound. British pound was universally oversold before the big rally. In fact, it's still pretty oversold. There's more upside in the GBP and there's more downside in the CAD. Obviously, you want sentiment at the bearish or bullish extreme. Participants, analysts, way too bullish of the Canadian dollar. Now, in terms of this trade, saying it in our previous videos, we just do a split bet. So basically, we're universally overbought in terms of the Canadian dollar. We don't know which is going to be the best performing pair. So we picked 4 out. This one is the underachiever, so to speak. GBP CAD is the best at the moment, and okay profits so far. Now, in terms of doing the trade setup, you want to hit hard. Okay, big bet, 5 to 10% on the idea. We bet 5% on this one. We bet 10% on the British pound. A little bit less on this one, but really good trade setup going forward, and we might add into our Canadian dollar shorts. Now, when you hit hard, okay, with a big bet, you don't want much confirmation in this trade. I'll come to the technicals in a moment. Use minimal confirmation, okay? Come to why in a moment and why that is not that risky. Okay, a lot of traders say, if you come in too early without too much confirmation, then you don't know the trend down is over. Minimal confirmation. I'll come to it in a moment. You do not want to move your stop too quickly. Okay. Now, very often you'll see a currency surge in your favor, then it will stall. Okay. And it's tempting to move the stop up or snatch the profit. Don't. What you want to do, if you bet big, do volatility partial banks. So what you do is you work out the volatility of the pair, and then basically against that volatility, you do a partial bank of half. Okay, so you put some money in the bank, you leave half from, and you can leave your stop back and still come out with profit. Come back to that when I do the technicals. The odds of hitting the stop in this type of setup are pretty low. Okay, you don't have your stop too close. You want it outside of noise just in case there's one more spike against you. Well, in terms of the chart setup, you can see USD sells off hard. Then, we'll notice it in our last video. You slow up on these 3 candles here. That one indecision. That low can't take out that low. That low can't take out the other 2 lows. So you don't need much confirmation. If you're looking for the bearish sentiment to peak, after looking at the Bank of Canada and the Fed, why do you need much confirmation? You don't, because the specs are going to get hit hard. Okay, so you may as well come in pretty close. So we elected to do this. Just come in through 130.80. Okay, saying that blue candle in my last video just extremely bullish. We just entered the trade because it made a new low below those three, and then we finished blue. So bang, up she goes. Now we're pausing a bit. It's slightly stronger since I pulled my chart down, but just around 100 pips. Now, in terms of doing a volatility bank, this isn't a very volatile pair. You could use 100 pips. That's what we've used. We've taken 100 pips away already. In pairs like GBP CAD, that are a little bit more volatile, it's 200 pips. Okay, so you decide it on the volatility. So we've got a reasonably big bet on. We've got half in the bank. Okay, the pips actually don't matter. It's the size of the bet, isn't it? We've still got a reasonable trade left on with the facility to add, and we can bring our stop up behind this second level of support here. See if we run. Okay, now in terms of you get the big move up, then we slip back a bit. We're now just near the high of the day, so I pulled the chart down, but no big move today. Next level to go through will be 132. So basically we've got the facility to add back in our half, or if we drift back, we can add our half back in as well. First target up here. Second target up here. And then our longer reading of the fundamentals and sentiment points to move up to 138. Let me just get my line straight. Need a new mouse. There we go. So basically, I'm not in this sort of situation, keen to bring my stop up too close. Okay, I don't think there's enough selling to take out that second level of support. Well, there might be, but we'll still come out with a profit. If we carry on to the upside, obviously we'll look to put back in some of our bank profit, probably, or on a dip off yesterday's candle low here. So we'll see how it goes. I mean, this one isn't much so far. The other three pairs are doing better. We've got the split between four of them. I'm looking for the CAD to continue down. I think yesterday was a key day for the CAD. It's not getting better for the Canadian dollar. It's only going to get worse. Speculators are still heavily long, so they can get taken out. In our view, right, let's go and have a look at the next pair, which has been a favourite of ours for a little while, GBP CAD. Let's use the charts from our member centre for the last three pairs. Now, this pair, GBP CAD, has been one of our favourites over the last few weeks and has been our top performer. In terms of anticipation, GBP long was just a great risk to reward trade, and a few decent trades out of this one, but the best one was the last one we did there, 500 pips. Then we come back and get stopped out, and then when we just base out here, we'll come in with minimal confirmation, and now up a couple of 100 plus pips, banked out half again, and we can buy the dip, or we can buy a breakout above this candle high here. Long way to go on the upside on this one. I've got this level here, which is 177, but you can see 190. You got the most overbought major, the Canadian dollar, against the most oversold, the British pound. A lot more upside in terms of this one, and I'm hoping we're going to be holding this for a little while. We shall see. Next pair we're going to look at is CAD JPY. Right, CAD JPY. In terms of this trade setup, we've actually been in it for a little while. We've came in at 82.65. We're saying we got above 83. Best way, if you're going to come in fresh, is to sell it back through the round number. And we added a little bit more on the break of the round number, and basically we're a little bit lower tonight, down towards the 82 level. So in terms of this pair, it's rolled over quite nicely. I'm really optimistic of this pair longer term. Yeah, I think we're going to get to 79. Longer term, going for 70. Now, in terms of our stop, I put it 84.20, which is way back. Okay, there's a big level of resistance at 84. I just didn't feel that would be taken out. Tomorrow, when I update the member centre, I'll probably bring that down something like 83.80 if we're soft. Okay, but yeah, this pair I really like the look of it. Long term, I think it's an attractive sell right now, in my view. A lot further to go on the downside. Japanese yen, very, very oversold. All the commodity currencies look good. Short on the JPY. I think this is probably the best one. Right, now let's go and look at the last pair, which is going to be Euro CAD. Last pair, Euro CAD. And in terms of regular views, you'll know I'm pretty bearish of the euro generally. And CAD, I've just so overbought. The euro looked a great risk to reward buy. And yeah, you get the big sell off here. Then we steady up. Then we move higher on the eve of the bank meeting. We'll just come in through the 145 level, punches up off the highs, but we can bank 150 pips out on this one on half our trade. And this one doing slightly differently. I bought the stop up quite tight, 145.60, just behind this 20-day moving average second level support. So this is probably a shorter term trade. I'm just looking for 149. Yeah, but we'll see how this one goes, but we'll come out with something on it. It was a decent risk to reward trade again. They all were, even if they were wrong. Risk against the reward, really, really good. Generally, I'm looking for more downside in the CAD. It's a simple trade setup. When investors get a little bit too excited about a currency and start to anticipate things that probably aren't going to happen, that's your chance to go against the majority. And you will get a result normally pretty quickly, either right or wrong. Obviously, we were lucky enough to be right in these pairs. Stops are getting run, more stops to get run, in my view. CAD going down. I'll update CAD pairs at the weekend, but that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.